The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Scorebox Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos, and these are your headlines. Massive volatility in the energy markets, with oil trading currently at $108 a barrel. This after nearing $120 overnight. But President Trump downplaying fears of a prolonged energy market shock.
There's a lot of oil. We've got a lot of oil. Our country has a tremendous amount, and there's a lot of oil out there. That'll get healed very quickly.
Crude prices pairing some gains as the G7 reportedly considers a joint release of oil from strategic reserves, with Saudi Aramco reportedly looking to offer oil on the spot market.
Equity markets in Asia plunged, with the Nikkei and Kospi leading losses, while Europe and Wall Street braced for more heavy selling pressure.
Iran picks Mojtaba Khamenei, son of Ali Khamenei, as its new supreme leader, placing a regime hardliner at the helm and defying President Trump's demands that he has a say in the selection.
A very good morning to you. It's been absolutely extraordinary events of the last couple of days as well, with both sides doubling down, as you can see from our headlines. The US president has said, well, he believes it's going to be a limited shock to prices. Others not so sure as crude prices continue to rally. But this is becoming a global energy shock now. This is potentially going to become a global economic shock as well. Doesn't matter if you're one of those high volume importers of hydrocarbons in Asia, and that's why the Asian markets have been so hit so aggressively. It doesn't matter if you're trying to forward buy your fertilizer, if you are a farmer, if you are buying your heating oil in the United Kingdom. I can tell you that UK heating oil prices, by the way, for immediate delivery, have more than doubled in the last couple of days. Think about that, more than doubled in the last couple of days. But perhaps what the president cares about most is US inflationary impulses. And whilst he was saying this will be a very short-term shock, that is not what we're seeing at the moment in terms of gasoline prices. Now, we know that the US is virtually energy independent in many ways, and yet gasoline prices in the United States that 1 week ago were trading around about $2.90, $2.94 on a national basis. We know there's an enormous variation, are now trading at $3.45. So Americans as well, despite their relative strength with energy independence, are also feeling this shock, and that's very important, of course, for the president.
A couple of points as we kick off the Monday session, and we're bracing for more very strong selling across on markets this week. There was a best case scenario for markets in that this would be a very short, sharp conflict, and a worst case scenario that this could endure for much longer. And the question is still dangling. How long will this last? Duration has not been addressed. We don't know what the markers are, what the president is hoping for in terms of achieving from this war. So that is enormous uncertainty. Is it the stock market? Is the reaction we're seeing globally, will that recalibrate for the president at all? I mean, what is the end game here? In terms of that market reaction, though, keep in mind European markets bore the brunt of some of the selling versus US markets, and we saw it in Asia as well. The selling stateside may step up again this week, and that is again the point. What takes place on the back of this? US dollar assets, do they reign supreme, or is it just the US dollar that is the safety trade as everybody races for liquidity? So more brutal market reaction certainly coming this week. We're still feeling it in the European markets. We're still feeling it in Asia. And for me, it's those high flyers again. We're still watching out for them. The South Korean market, the Kospi, off close to 6%. And even the gold price this morning down again. That is tracking lower by 1.5%. So it is by no means safe harbor.
Yeah, and I suppose the other thing people will be watching and wondering is how long does this go on? How much further does the Strait of Hormuz stay shut? And when does it start feeding substantially into inflation and thereby limiting the path of rate cuts that we're seeing by central banks? There was talk over the weekend in some quarters, some papers, some publications of bets now on perhaps even some central banks starting to look at tightening rather than continuing their rate cuts.
So crude prices have surged above $100 per barrel after major Middle East producers, including Kuwait, Iraq and the UAE, cut output amid the de facto closure of the Strait of Hormuz. The ongoing conflict in the Middle East has seen transit through the critical choke point all but halted, with Gulf states running out of storage. In a post on Truth Social, the President, Donald Trump, suggested the price spike would be short-term, calling it a very small price to pay for destroying Iran's nuclear threat. Speaking to reporters on Saturday, the President also downplayed, or looked to downplay, broader supply concerns.
There's a lot of oil. We've got a lot of oil. Our country has a tremendous amount, and there's a lot of oil out there. That'll get healed very quickly.
Would you consider using the SPR or tapping into the SPR at some point?
Strategic reserve?
Yeah.
Well, I'm the one that built them up. Biden used them so that he could get some extra votes in the election. It turned out it wasn't even him that ran, it was Kamala. And she obviously didn't get any extra votes because we won in an absolute landslide. He shouldn't have used it for that. He used it I filled it up, and he brought it down to the lowest level it's ever been. We will start at the appropriate time, which is basically a gut instinct. We will start filling up these strategic reserves.
Speaking to NBC News' Meet the Press, Iran's foreign minister again dismissed the prospect of an immediate ceasefire as the conflict enters its second week.
People have been killed, places have been destroyed, and now they want to ask for a ceasefire again? Well, this doesn't work like this. So there should be a permanent end of the war. And unless we get to that, I think we need to, continue fighting for the sake of our people and our security.
We are going to get to the reports about some of the deaths in just a moment. But just to stay on this topic, would Iran ever agree to a ceasefire to get back to the negotiating table to end all of this military conflict?
Well, they have to explain why they started this aggression before we come to the point to even consider a ceasefire. Of course, nobody wants to continue this war. This is not our war. This is not the war of our choice. This is imposed on us by the United States, by Israelis.
All roads lead back to energy for the Asian markets, and you can see the very strong response across the region today. Japan, a big oil importer, don't forget it was down much more heavily earlier in the session, about 7%, so it's trimmed some of those losses, but as you can see is still trading lower by more than 5%. This on the back of a 5.5% plunge last week over the course of the trading week. Now South Korea, the other market we've been watching very closely, it was down about 8% this morning. It was down 10% last week. So again, we're talking very big numbers. Currently this hour down almost 6%. So the market is again raking back over both of these markets that were some of the preferred trades along with Taiwan last year and into this year, areas where the markets were positioning portfolios too. Out of the Chinese markets today, we have seen a slight pickup in inflation too. And don't forget, that is the market that everybody's looking for. Where was inflation at before the layering on top around this oil crisis? Now, a slight pickup on those consumer prices, 1.3% on a year for the Chinese market. But don't forget, somewhat rare to the rest of the international economies, it has been in battling deflation in recent months. So that pickup, not necessarily a bad thing, but the market's closely again looking at inflation numbers this week. And that'll be the same story too for the US markets later this week. In terms of European futures, now last week as we wrapped up the trading session, we were down roughly 6%. That was on German stocks, the French stock market, Italian names. So many of these markets, very heavy losses warned. This morning it looks as though we'll strip another 2.5% off the benchmark. The stocks 50 futures indicated down. FTSE futures again more contained thanks to those oil companies listed on the FTSE, but so far seen lower. DAX futures as well, 2.6% down. Now, I mentioned the inflation numbers. We'll be closely watching those midweek, but we do come off the back of a plunge in the non-farm payrolls Friday, far below expectations. The market wondering just what sort of weakness we're really seeing in the US economy, thanks to recalibrating around the economic fortunes, but also around AI. The market now looking for that inflation number this week. US futures seen down 860 odd points on the Dow Jones. So again, this market last week we saw was lower, but by no means the same as Europe. Down 3% on the Dow last week, down 1.2 on the Nasdaq last week.
G7 leaders are reportedly set to discuss the release of oil reserves at an emergency meeting today. This according to the Financial Times, which says IEA Executive Director Fatih Birol will hold a call at 1:30 London time to discuss the impact of the war in Iran. The newspaper says at least 3 G7 countries, including the United States, support the idea. If it goes ahead, the move would be a substantial U-turn for the Trump administration, which said last week that the country would not need to tap reserves to stabilize markets. Meanwhile, oil giant Saudi Aramco has reportedly offered supplies of oil via the spot market, as oil traders look to get around concerns over shipping via the Strait of Hormuz. According to Bloomberg, Aramco offered 4.6 million barrels in recent days. Shipping data shows Saudi is increasing shipments via the Red Sea, away from the Strait of Hormuz and further from Iran. CNBC has reached out to Aramco for comment. But I just want to add in at this point, if I may, we're getting some amazing commentary from a lot of the experts out there. And Goldman Sachs has just pointed out in the last few moments or so about the kind of supply that Saudi can send via the Red Sea versus what it can send via the Strait of Hormuz. And it doesn't make great reading for those thinking it's going to improve the situation dramatically. Goldman Sachs says, we estimate the net redirection via pipelines and the ports of Yanbu, i.e. the Red Sea, and Fujairah only at 0.9 million barrels per day over the last 4 days versus a theoretical estimated of 3.6 million potential. This week's strikes on Fujairah port and oil facilities, local shortages of marine fuel, etc. for oil tankers, and past strikes on pipeline illustrate the downside risk to redirection. It is not that simple as just taking it from the ports or from the refineries and sending it cross-country to the Red Sea, something which I know Dan is very aware of as well. But let's get straight to Dan Murphy, who's leading our coverage in the Middle East. Dan.
Steve, it's a really good point. And just to add to that as well, of course, we're talking about a producer here in Saudi Arabia of 10 million plus barrels of oil a day. You just cannot get those volumes through pipelines. And of course, that east-west pipeline could act as an alternative, but the volumes that are likely to pass through are minuscule in comparison to what is needed to pass through the Strait of Hormuz to really alleviate what is quite a significant supply-side crunch now emerging in this market. We've seen oil prices surging again today. Brent crude actually pushing above $115 a barrel in the Asia session. And this is the very scenario that energy markets have been wargaming for decades. Steve, I know you've been following this really closely as well for many, many years now. The fear for a long time has been a direct conflict with Iran that threatens flows through the Gulf and the Strait of Hormuz. We're seeing that play out right now. The scenario has turned into a real world situation. And this conflict has already seen strikes on Iranian energy infrastructure. We're looking at targets in Gulf energy infrastructure as well. And of course, key oil refineries and fuel facilities as well, really raising fears of a broader supply crisis across the region now. Global energy flows, of course, being thrown into disarray as we see the Strait of Hormuz, the world's most important oil choke point, remaining effectively closed to commercial shipping. It is the most serious supply shock to hit the energy market since the 2022 crisis, and it could also effectively hit the global growth and inflation outlook for 2026 if it is sustained as well. I'm looking forward to listening into your commentary with your guests on that later on in the program. And the issue in the region is also structural as well, because we are seeing storage facilities across the Gulf also essentially filling up as well as these producers struggle to move crude out of the region. At the weekend, we were also monitoring reports that producers like Iraq, for example, had cut production at major fields by around 70%. Kuwait was also moving to introduce precautionary output reductions. And in the UAE, it says it's still carefully managing offshore production, although ADNOC here says onshore operations remain normal, at least for now. So this is real. We've seen oil prices spiking today and the geopolitical risk premium in the market continuing to rise. Perhaps a sense of complacency also coming through for traders over the last couple of weeks who have been watching this conflict unfold, wondering if there's going to be a supply side shock. Well, now we're seeing that unfold again in real time here, given the blockage that we're seeing in the Strait of Hormuz and the inability of the major producers to get crude to the market. So that's why we're seeing triple digits on the oil price today. Yes, certainly off the highs of the Asia session, but still look at this, double digits for the percentage increase here, triple digits for Brent and WTI, and the spread between these two contracts also narrowing. Interestingly, of course, That's because Brent is seaborne, so you would expect the Brent price here to trade at a premium to WTI. But WTI also getting a pop off the back of this because now there's a rush to onshore oil and any oil that you can find basically that isn't on the sea at the moment, which is why we've seen that spread between the two contracts narrowing at this point as well.
Dan, while we have you, let me follow the money to the Gulf states and the fallout that we're seeing there, because there was an apology over the weekend from the Iranian president, but yet the attacks continued, and attacks that we talk on by Iranian desalination plants that supply crucial drinking water to the region, a drone exploding near Dubai airport, talk from the UAE that there may be some sort of freezing of billions of dollars worth of Iranian assets. That is something that is up in the air. Just talk to us about how the Gulf states are recalibrating now and thinking about the consequences of Iran's actions.
It's such a great question, Karen. I actually spoke with UAE official on Friday. We were briefed on the leadership's current thinking with regards to a future relationship with Tehran. And the key takeaway for me was that this has created an enormous trust gap between the Gulf states and Iran. While countries like the UAE, for example, had, of course, expected an escalation, they did not anticipate that Iran would go this far by attacking its neighbors. And of course, at the weekend, we also saw Iran's president, Pezeshkian, also suggesting that Iran would no longer attack the Gulf states. Well, his words fell on deaf ears to the IRGC commanders who have their hands on the triggers here, because of course we did see those attacks continuing, really leading to a suggestion that at the moment there's no real clarity as to who is exactly in charge inside Iran, despite the fact that we've seen a new supreme leader being announced in the middle of this crisis only in the last couple of hours as well.
And thank you so much. We do appreciate all the background there. And speaking of the changes now in Iran, Iran has named Mojtaba Khamenei as the new supreme leader, succeeding his father, Ayatollah Ali Khamenei, who was killed at the start of the war. Trump has previously called Mojtaba Khamenei lightweight, while Israel said it would target whoever took the role. Israel has carried out strikes on Iranian oil facilities, sparking large fires and thick smoke over Tehran. The strikes appear to be the most significant on civilian infrastructure since the start of the war last week. Jasmine Al-Gamal, who is former Middle East advisor, U.S. Department of Defense, and founder and CEO of Averos Strategies, joins us now. Jasmine, thank you very much for joining us. The developments over the weekend certainly escalated. Markets are looking again to react this morning. Just walk us through the changes you've seen, the significance of a new supreme leader that's been declared without Trump's approval.
Thank you so much for having me. Good morning. We're looking at probably even more escalation in the coming days as both sides, Iran on one side and the US and Israel on the other side, try to consolidate their gains and continue to raise the cost of the war on the other. Now, Iran is projecting a very defiant outlook, basically, by announcing a new supreme leader, the son of the assassinated supreme leader, Ali Khamenei. And this new supreme leader, the son, is not only someone who just lost his father in this U.S. attack and Israeli attack, but he's also reportedly lost several other family members as well. His wife, his mother, a son, and potentially others as well. So you can imagine that this is not someone who's going to be in any kind of conciliatory mood. And on the US side, they will not be able to say that they had any say in the succession plan. So the two sides continue to be quite far apart. And that's why I say we're going to continue to see more escalation from a military perspective over the next few days.
Jasmine, there was a lot of discussion about whether there were any off-ramps for Iran here and whether the apology that we heard over the weekend from Iran on those attacks on Gulf neighbors had any weight, whether it was a suggestion they were looking for an off-ramp. What do you think? Is there a way for Iran trying to come back to the negotiating table from here, even as you talk about escalation?
Well, there are a couple of factors here. One is that the trust has been completely eroded between the Gulf states and Iran. The Gulf states were extremely surprised at the reaction, at how they were attacked, even civilian targets, not just military targets, and see that as a real betrayal on the part of Iran. So that trust deficit is going to impact relations moving forward when it comes to an off-ramp. And also the fact that the U.S. President and Defense Secretary as well as the Israeli Prime Minister, have been gradually increasing their rhetoric to become more and more maximalist, even as they see apologies from the Iranian side. The third factor, of course, is that we don't actually know how much the political leadership in Iran is in charge at all, rather than the IRGC, which seems to be calling the shots on a day-to-day basis, especially when it comes to military and security operations.
Jasmine, I value your opinion enormously, and thank you for your expertise. But you did say you think things are going to get a lot worse in coming days. And I wonder, though, given the cost that this is now taking on the global economy, on partners of the US, on Asian customers, on Middle East partners, and, dare I say, on the pumps in the United States, where despite the US energy independence, we have seen a dramatic surge in gasoline prices to nearly $3.50, which the president will see as hurtful in his chances for the midterms for the Republicans. Do you not think the pressure is building for some form of détente in this, actually, given the fact that this is hurting partners and indeed Americans?
It's a very good question. Of course, I think the pressure is building, but if you look at it from a U.S. perspective, the president has really set himself up. He's sort of backed himself into a corner here with that escalatory rhetoric that he's deployed over the last few days, talking about unconditional surrender, talking about the fact that the U.S. is going to set the terms for Iran's surrender. That was from Secretary Pete Hegseth in an interview. And so every time there seems to be even a sliver of an opening, they shut it down with that rhetoric. And so in order for the president to declare some sort of victory, he really is going to have to point to something significant that he's done. Now, we still have uranium stockpiles in Isfahan. We still have a supreme leader replacement now. It's very difficult. You know, we have the IRGC saying that they're ready to fight for another 6 months. It's difficult at this point specifically, this week at least, let's go week by week, to see what Trump could declare as a victory. I also am watching closely the relationship and conversations between the Israeli Prime Minister and the US President, because over the next 2 weeks is where you might start to see US and Israeli objectives start to diverge, where the Israeli Prime Minister is dead set upon full-on regime change and will want to continue fighting, whereas the US President perhaps next week onwards will try to claim that military victory, a degradation of regime capabilities, and try to look for that off-ramp. And there might be some tension starting to simmer there.
Jasmine, it's Ben here. I just wonder how much jeopardy there is for the Gulf nations in all of this, because if some sort of deal were cut, if President Trump was able to reach some sort of deal about Iran's nuclear program and some sort of surrender, part of that may be seen by Iran as if they hit America's allies in the Gulf, they can force America to change course in future. And that leaves the GCC incredibly vulnerable, doesn't it?
Yeah, such an excellent point. And I was just talking about this yesterday, and these are really the long-term ramifications of this conflict. And that's why it's so important how it ends. If President Trump were to say, let's say next week, 2 weeks from now, he's had enough, the pressure's building, and he says, okay, I am now going to declare victory, military victory. We'll leave the supreme leader where he is, but we'll say, if you cross us again, we will come back and do this again. Leaving it open-ended like that to a certain extent really puts the Gulf in a precarious situation in terms of risk factors moving forward. The Gulf predicates its entire growth strategy on the assumption that it's a safe place to live and work and invest. And if this conflict ends in a way where it could be reopened again, which is looking likely if the regime doesn't capitulate completely, then that definitely leaves the Gulf open to vulnerability in the future. And they're going to have to bake that in to their future strategic planning.
OK, Jasmine, thank you very much for your thoughts and analysis there. Jasmine El-Gamal, former Middle East advisor, US Department of Defense, and founder and CEO of Averus Strategies. On a programming note, our US colleagues will speak with the US Special Envoy to the Middle East, Steve Witkoff. That interview coming up at 4 p.m. London time. Still to come on this show, the US economy faces headwinds at home as well as overseas as job creation comes in way short of expectations in February. Plus, we'll stick with the oil story amid a warning that the Iran war has created the largest oil disruption in history. And we'll hear from ExxonMobil chief economist Tyler Goodspeed, author of Recession, the Real Reason Economies Shrink and What to Do About It. That interview coming up at 8:30 London time. Do stay with us.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. Let me take you through this oil price. Everything is feeding off the oil price at the moment. There's a lot of other big news out there, whether it be in the private credit space, whether it be in the jobs figures that Karen will talk to you about in a few moments' time. But it's actually about the events in the Middle East, which are predominating, as you would expect. Now, we are still trading up 16% on Brent and around about 12% on WTI. But the moves, as you well know, and I'll just remind you, come on the back of dramatic moves we saw last week, where WTI, the US benchmark, rallied 35.6%. There are some times when in our job we have to explain numbers, other times when the numbers speak for themselves. WTI last week up 35% and Brent put on 28%. Let's take a very quick look at where the US futures are trading. And on the back of events in the Middle East, primarily, of course, as I say, Karen's going to talk you through some of the domestic factors in the US as well, but we are called down a mean 1.5% on US equity futures.
The fallout from the conflict in the Middle East will be a key factor for the Fed officials when they meet next week, by which time they will be armed with the latest PCE and CPI prints. Today's surge in crude prices will likely fan fears of inflation, with consumer prices seen rising 2.4% in February, while personal consumption expenditures index, the Fed's preferred inflation measure, is expected to come in at 3%. That all follows a weak jobs report on Friday, with non-farm payrolls falling 92,000 in February, for the biggest loss since last October. Chicago Fed President Austin Goolsbee acknowledged the challenges facing the Fed with sticky inflation and a weaker jobs market, saying that's not fun for any central bank. Well, as a result, we're closely watching treasuries and the tug of war now for bond markets as they price in the inflation expectations with a weaker growth profile that is coming through on the jobs side. The 2-year, we are 3.61%. So again, we're high across at the short end. The longer end, the 10-year, 4.17%, the level we're watching. Don't forget last week, we were also elevated. We moved off a baseline level of 3.96%. So we're certainly escalated, as you can see, another 1% bump up this morning. But what it means for the Fed on the back of some of these numbers, whether we start wiping away some of those rate reductions that the market was hoping for. And the dollar trade has been fascinating, despite that yield story, as we talk about whether the ECB could be hiking rates in June, not even later this year or next year. That actually has been brought forward now to potentially even fall at some marker mid this year. The yield story is not catching any traction. It is all about energy prices, the consequences of that big spike that we're seeing in oil and gas, and what that means for various economies. So dollar this morning is still king. Euro dollar on the back foot, 115 the level. So as you can see, dropping another 0.6%. Sterling sliding 0.6. Dollar yen also gaining. So even the safe havens having no ability to claw back any trade from the US dollar here. Yen, Swissy also on the back foot, typically a moment when they start to shine.